Hello everyone, my name is Sriram Iyer. I'm an analyst at the commodity research desk at Reliance Securities. Welcome to this week's gold podcast. So it was a holiday truncated week in the international markets as US was shut on Monday due to the July 4th holiday. However, this week was all about the Federal Reserve minutes. The minutes which was released during the week confirmed that the Federal Reserve is edging closer to tapering asset purchases. According to the minutes, various members mentioned that they expected the conditions for beginning to reduce the pace of asset purchases to be met somewhat earlier than they previously expected in the previous meetings. However, at the same time, the minutes also showed that the members believe that the substantial further progress they want to see has not been met yet with regards to the economic recovery. So minutes were slightly on the mixed side, and concerns over the U.S. labor market recovery kept gold near a 3-week peak this week. We saw that this week's jobless claims were slightly worse than expected. The jobless claims surprisingly rose last week to 3,73,000 applications, above a forecast of 3,50,000 applications, suggesting that substantial progress needs to be made in the form of, in the labor market for the Fed to raise interest rates, and this actually kind of weighed on the bond yields, and of course slight weakness was also seen on the dollar side of things, which kept the upside intact for gold markets this week. Gold also found support as rising COVID cases, especially the Delta variant, which is more transmissible, has again caused havoc in certain Asian nations and certain parts of Europe, and the safe haven appeal of gold remained intact this week, and again continue to push markets higher. Next week, with the major events out of the way, like Fed monetary policy and the Fed minutes, the gold price movements could depend on the data next week, and of course, we'll track the data of the track the movement of the dollar. Investors could continue to unwind risky assets like equities over the concerns of spread of the COVID-19 Delta variant, which will increase the demand for the safe haven appeal for asset classes like gold and silver. We saw that this week a resurgent COVID forced Japan to declare a state of emergency in Tokyo that will run throughout the Olympic Games as well. So I think other nations like South Korea is also reporting higher cases of the Delta variant. So this will be a concern going forward. Of course, again, if the governments are not able to bring the caseloads down, then we could see again restrictions imposed, and which could probably move the markets higher, supported by the safe haven appeal of the gold and silver prices. So I think overall we see that any dip in the market should be an opportunity for investors to buy or traders to buy at a lower levels, at least in the short term. On the economic calendar front, next week we believe that the key trigger point will come from the US CPI inflation data and PPI data, producer price index data, due in the early part of the week. In the latter half of the week, the US is expected to release the retail sales, which could also impact the markets during the week. Across the Atlantic, the UK and the Eurozone are also expected to release their respective inflation data for the month of June, and could have a small impact on the market. So the theme for next week is inflation, and as we all know, gold is used as a hedge against the inflation. So any spike in inflation could also lend some support to the gold and silver markets next week, probably in the coming few weeks, in fact. So we have to wait and watch how the data pans out next week. Meanwhile, early this morning, we saw that China released its inflation data, and factory gate prices remained on the higher side of things, but fell slightly month on month as global commodity prices level off. So as I mentioned, so we have to wait and watch how the data pans out next week. On the charts, gold in the international markets are trading above an important level of 1795, and a close above today will push the markets towards 1825 next week. Additionally, if all factors remain in favor for the gold upside, we could witness price testing the 50 mark as level as well next week. If indeed favors, if in these bullish markets come into picture, and if bulls do control the markets next week. So I think 1825 will be the level to watch out for on the upside. On the downside, however, 1795 will be the pivotal support level, and again a trade close below that will pull prices towards 1770 or even lower towards 1750. So I think 70, we can say, assume that 1795 will be the pivotal level to watch out for investors and traders, and trade below that level will continue to weigh on sentiments going forward. On the domestic side, 48,200 will remain the immediate hurdle for the markets, and above trade above will again push the markets initially towards 49,000 possibly. But again, 48,200 trade above, or a sustained trade below this level, and close below 48,200 this week will again, or could again, pull prices towards 47,200 or even lower than that. Possibly we can see markets test the 46,500 if favors remain, if the market does not go favor the gold bulls in the short term. So a big correction again, probably $1,000 rupee drop can be expected in the domestic markets. But we have to wait and watch what happens on the data front, and of course market will be dollar dependent more next week as well. So again, all eyes will be on the data and the dollar going forward in the next week. So thank you for listening. Have a pleasant day, and have a pleasant week ahead. Thank you.